It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Good morning, Rod and Joe, who originate from Brisbane. We got your email. You say, stop talking about Dubai as the alternative lifestyle city to move to. Now, let's unpack your email. You say that you've lived in Dubai for 3 years. You miss Australia and are moving back in January. Whilst it was fun, it hasn't proven to be long-term for you. And the unfortunate aspect, you say, is that you're going to end up losing on property transactions because of the way that the Brisbane property market has gone over the time that you've been away. You say that you should have kept the family home and not sold it and bought something cheaper in Dubai, like a one-bedroom apartment. I would have been really fascinated in terms of what you have bought there in Dubai. You're in your 50s, friends and family are in Brisbane, which is calling you back. You got a feel for Rod and Joe there. They've sort of probably thought that they were doing the right thing, but they should have held on to that Brisbane property. Good morning.
Good morning. And yes, look, I don't disagree. Unfortunately, the way property values have escalated so rapidly, they will find themselves in a position where for, the amount that they sold a property for is likely to get them 2/3 of the house that they previously could afford, because the market really has shifted that rapidly in such a short space of time. So it's a very unfortunate situation to find themselves in.
Yeah, and it might not be Dubai that you're looking at moving to. It might be another country. Go into the whole rental thing for a while. Just get a taste of it. Sure, you might have visited Dubai a few times and thought, no, this is where our life is going to be. Play it safe. Put some tenants into your property, in this case in Brisbane. I mean, we're saying all of this, Melinda, after the fact, but that's probably the way to go.
And not just that, also transaction costs to get into and out of the property market can be quite prohibitive. You've got selling agent fees when you sell, and when you purchase back in, you've got stamp duty and other purchasing costs, including a buyer's agent fee if you're using a buyer's agent. These additional costs do add up. So staying in the market potentially and holding that asset during the time that you are abroad can make sense for a lot of people.
Have you got used to this term, second most expensive city in Australia?
Certainly, we have. Median values here in Brisbane have surpassed Melbourne and Canberra. So the only capital city that is ahead of Brisbane right now in terms of median values. Brisbane is becoming less affordable, but it's very important to get an understanding of what your money will buy in certain locations on a square metre basis to really unpack the value that Brisbane can still provide.
Yeah, let's just sort of take that one step further, because Brisbane has become just as challenging as Sydney for first-home buyers, despite that $650,000 gap in median house prices. New data shows that the price difference at entry level has almost vanished, with Brisbane's cheapest suburb, Russell Island, now they say pricier than Sydney's Mount Druitt.
Buyers need to be aware, simply because of the very rapid price escalation in Brisbane over the last 5 years, where entry prices now sit, because otherwise they find themselves falling behind the market. And with monthly growth still escalating so rapidly here, it's much more important to align with the market quickly to be able to buy something, as opposed to getting lost in the chasing game.
Right, let's go to Sydney and catch up with economist Warren Hogan. Welcome back, Warren, to the Real Estate Breakfast. Got to pick it up from there. 50-year mortgages in the US. Good or bad?
Yeah, good morning and thanks for having me back. Yeah, generally bad. When politicians start suggesting things like 50-year mortgages or intergenerational mortgages, it's actually a reflection of a problem in the economy and the market. We've seen it in Japan many years ago, where they had extraordinarily expensive housing. We've heard murmurs of it here in Australia at times, and this is just a reflection of It's a solution to a problem that has better solutions. Having mortgages that go for 50 years is just, as you said, just going to create a longer commitment. And of course, we're already seeing hints of it in the sense that as a 50-year-old in Australia, it's not too hard to get a 30-year mortgage, let alone a 30-year-old getting a 50-year one. So I think the real issue is that this is just another sort of marker that we've got some real underlying asset price or house price problems. This is not the solution.
You mention commercial property because that's being talked about quite heavily in the US, and there is some chatter in Australia about commercial property. Boy, some of these organisations, they are spending large, and they've got these syndicates, haven't they? So you've got the mum and dads that are investing in commercial property. Is that an area of concern to you from an economist's point of view?
It is, yeah. I mean, I think in Australia, it's not as big and it's not as systemic as you would see in the US, given those numbers you're talking about. Our markets aren't quite as developed, but it is a concern. It's a concern from a investor confidence and a regulatory point of view. That is the potential for individual investors to do their dough, so to speak, on bad investments. But it's also a concern from a broader market point of view in that there's a lot of funding structures that are under pressure and they'll need to be resolved. And, you know, the sooner you do it and the sooner the hit is taken by those involved, the more we can move on and, you know, make sure the good property developments are funded, et cetera, et cetera. So this is a real issue and it's coming to light now. In Australia, it's going to continue to be an issue, I think, at that individual investor level, whereas as we've talked about in the US, it could be a macro issue. That is, we could see a wholesale increase in demand for funding from the banking system to cover these bad structures, and we're getting hints of that now.
Right, we should have a look at the RBA rate cuts. Off the table. This was very disappointing for mortgage holders. What's next when it comes to rate cuts next year on your radar?
Yeah, well, the RBA's had to sort of face up to the realities of stronger economic activity over the last 3 months and, of course, that higher inflation figure we got for the September quarter. They've therefore sent a pretty strong signal that rate cuts are off the table for the time being and could well be off the table full stop. My sense of it is the economy is performing a lot better than many thought it would. There is a genuine recovery happening in consumer spending, which of course drove the slowdown a few years ago. That's seeing business activity pick up, and then I think we're going to start to see business investment and business spending more generally pick up, in which case we're going to be talking about, I think, rate hikes next year, unless of course there's some major financial catastrophe that takes all that off the table. But if the normal flow of the economic cycle continues to play out, I think we're shifting towards a situation where the current cash rate of 3.6% is not restrictive, is not tight for the whole economy, and that we may see some rate hikes in the second half of next year.
Ready to take your real estate knowledge to the next level? So are we.
You want to tell us in particular about your postcode and how that is flourishing, because it's getting very, very close to that median house price of $2 million.
Really close to the magic median of 2 million, yes. And for me, being on the ground, being, a resident and real estate agent in North Coogee, I'm not surprised because of the beach-going lifestyle.
So tell us why North Coogee is around $600,000 above neighbouring Coogee. What's going on?
So beautiful North Coogee sits directly on the ocean. So it overlooks the Cockburn Sound here in WA. It's premium, and that's reflected in the new median price.
Now, we did this for Brisbane yesterday. Let's just have a look at some of these numbers from PropTrack. And North Coogee, we'll have a look at that first. As I mentioned, the median is 1.960. That is up 14% over the last 12 months. The average hold time, very, very short, only 3 years. Winthrop in WA, that's got a median house price of just over 1.6 million, 12% growth over the last 12 months. Average hold time, 12 years. And Guelph is now got a median house price of 1.5. That growth is 6% up. And look at that. People have been really holding on to their properties there 15 years. So what's going on with the very fast turnaround times? I probably would suggest that because the growth factor is there, people have just decided to cash out.
Absolutely. It was time for North Coogee to come into its own. It's a new suburb, so it was created in 2005. So it's in the scheme of things, this pop of growth in the last few years has definitely made local residents think, is it time to sell?
Listen to in-depth discussions with industry leaders on investing options, understanding different suburbs with insider perspectives and exclusive tips.
One of the reasons why we've got you on this morning is to talk about investor lending in New South Wales, which is skyrocketing. It's something that you have paid a lot of attention to, which is outpacing owner-occupier growth by this staggering 600%. This is according to money.com.au. And we talked about this just a couple of days ago. And new ABS data shows that investor loans jumped 12% this year, while first home buyers barely moved. This is a very big talking point.
Yeah, I agree. So, because I'm a buyer's agent, we actually look at lots of different markets. And one of the main criteria to look at is owner-occupied purchases versus investor purchases. And a lot of the areas we're looking at, where it used to be a healthy market was 70% owner-occupiers and 30% investors. Some of the areas we actually started looking in, it was actually flipped. It's 70% are investment purchases versus owner-occupied. And when we looked at the stats, like you mentioned, the owner-occupied loans are actually dropping and investor loans are actually growing, which is a stark reality for if that trend keeps on continuing in the next 10 years, what the market's going to look like.
Yes, that is a really worrying statistic. And you have also warned Australia's housing market could soon mirror New York or London, where ordinary wage earners are permanently priced out. And you're predicting within 10 years investors could dominate home ownership.
Yeah, so this all started actually when I was living in London, and I was talking to, because I work in real estate, a real estate person, and they were telling me how their parents were passing on the lease for their rental to them. And I was like, lease, do you mean like the ground rent? Like they've got some weird systems over there with chain systems. They're like, no, just the lease of the actual property, which baffled me that parents are passing on a lease, not the actual property. And then when I looked into it over there, most of the commercial institutions own the large buildings. So we're not talking about regional, we're talking about typically inner CBD locations and CBD locations. Corporations basically own the CBDs now. So home ownership's completely gone out of London. And the same thing is for New York, mainly because they're priced out. Now, basically, these are commodities. So it's like buying shares and looking at return. They're no longer looking about do owner-occupiers actually want them. And that's actually, when I looked at the stats in Australia, we're actually following the same trend. And Australia is obviously a very young country. We're just over 100 years old versus these ones that are, I own a property in the UK that's 300 years old, which is older than Australia in general. But the trend is looking that way, that we're going, that home ownership in these capital cities is going to be a thing of the past.
And drilling down on Australia's property market, which you've mentioned is being reshaped by this surge in multi-property ownership, this is the key for me. Everyday investors, now it's not just the wealthy, it's the everyday investors. They're the ones that are snapping up multiple homes for rental returns. And of course, that is just fueling everything, exponentially.
It's a self-fulfilling prophecy. So like most of my investors and my friends even, they can't afford Sydney where we live. Like it's actually unaffordable. Like if you're buying middle ring, you're talking $2.5 million plus for people that earn $150,000, $200,000. So that's more than 10 times their income. So they don't have any other choice but to do the rent vesting model or move to a regional area. And most of them, to earn that 150K plus, they need to be in the capital city, Sydney, because they have to go in the office 1, 2, 3 days a week. So they're moving to that rent vesting model, which is, like you mentioned, looking at that return on investment. And that's why they're looking at other areas. So that is the self-fulfilling prophecy, because they can't afford the blue chip locations. They're then increasing the investor activity, which is further separating the gap.
Aussies are cutting back to buy a home. Nearly 4 million Aussies have dramatically cut their spending and personal debt in the last 5 years in order to boost their borrowing power. That is according to a new report from you guys.
Yeah, that's exactly right. I think it's no surprise to anyone that affording a home or buying a home has become really difficult for first home buyers, more difficult than it's ever been before. We're seeing people really make a lot of personal sacrifices to try and keep that dream alive. So they're really scrutinizing their budgets, looking at what they're spending, everything from their everyday purchases to their household bills, digital descriptions, buying lunch, all of those things have all become under the microscope. And it's really important because they may seem like small things, but they actually can be the difference between your loan being approved or you getting rejected, because banks are looking at that kind of granular detail now. They want to see what your spending habits are like. They want to make sure that you're a really responsible borrower when they're handing you these loans for very big amounts of money. So it actually does really work in your favor, as well as boosting your deposit. It's going to set you up for the best possible chance of a loan approval as well.
Got to ask you, in terms of the survey that you did with all of the people making these sacrifices, what was the sort of the commonality of a couple of them that was a through line that you could share with us that everybody's kind of doing and was easy to cut back on?
Yeah, I think it's interesting to see the overall trends. It's obviously different depending on where you live. If you're in a regional area, you don't have as much option or as much opportunity to shop around the same way that people in capital cities do. But we're really seeing people look at their household spending and their daily habits. And I think there are some really easy wins there when it comes to cooking and groceries. Even the most basic things like butter and cheese are now very expensive. You know, I've seen butter for $10 and the cheese I buy, which is just regular cheese, can be $15 now. So looking at those opportunities to be really strategic with your spending on supermarkets and takeaways can be a huge opportunity to save. I was actually just speaking to someone last month. We were talking about their goals. They wanted to buy a house. They actually earned a really good income and they had a decent deposit, but they weren't making enough progress. And when we looked at their spending, they worked out they were spending about $400 a week on Uber for dinner, Uber Eats for dinner, and on coffees and buying their lunch. And they just weren't really cooking much. They were lucky to be cooking once or twice a week. You could almost halve that spending. It was for two people, and that's another $10,000 a year that's going towards your house deposit. So there's some easy wins there when you look at your lifestyle spending.
That's the neighbour you want to be invited for dinner by the sound of it. All right, let's have a look at the latest data on the fact that more than 1 in 3 Aussies no longer believe they'll ever afford a home. Many people are putting major life plans on hold, delaying having children, upgrading cars or taking holidays, etc. That list is probably quite extensive, but it's a little bit sad, I feel, that, 1 in 3 Aussies don't believe that they'll be able to get into a home ever.
I agree. I think it's a real sign of the times that it's now not even something that people are delaying. It's just something that for a lot of Australians, they've come to the realization and that buying a home is just probably not in their future. And I think it ties into that previous data we were talking about, that people are looking really hard at their situation and their future, and they're trying to shift their habits to try and make it more of a reality. We've obviously seen the government really try to push their first home buyer policies, and they've made some changes to try and make it more affordable and easier for first home buyers to get in with a smaller deposit. But for a lot of people, for 1 in 3 Australians, they just don't think that that's ever going to be on the cards for them. The thing that's happening in families and inheritance at the same time, where we're expecting over the next 2 decades for $3.5 trillion in generational wealth to be passed down. And that could have an impact too. I think we're seeing for a lot of people that they're seeing their only pathway to home ownership is going to be if they inherit one, or they inherit the money to be able to buy one from a loved one that passes away. So it's a really huge structural change in how generational wealth has shifted and how home buying trends have shifted over the last few decades.
We connect you to the best real estate information across Australia. The Real Estate Podcast.